I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on. It is always a pleasure, Jim.
Rick, is deflation raising its head in the markets?
Not by a long shot. I mean, not that you could tell really by asset expansion in stocks. When I talk about a deflationary end game, it's really the big picture. I certainly don't use it as a timing device in the markets, but I think we're very much at a kind of inflate or die position where, in spite of all the stimulus we've had in recent years, we find that that the economies of Europe and also China are sinking, and the question is, can the U.S. Stock market sustain altitude with that going on? So we seem to be getting back into a global easing. I'm not going to call it a cycle, but let's say the drumbeat has gotten louder and louder about everyone expecting the next move to be easing. And I don't know. The way the Fed trots out these spokesmen from the various regional banks, you can't know. It's like one day they're saying, well, we might ease. I mean, we might tighten a little bit in 2019, maybe once in 2020. So the managing expectations of what they're doing is they're managing it by way of keeping us always anxious about what's really coming. So deflation's sort of the big picture, and I think as we've talked about this before, the first place it's going to hit home will be in the pension system. We've got a bankruptcy, a bust coming up in the public and private pensions, but most acutely and first of all, and let's say the state of Illinois. That would be my prediction, the first state that needs a bailout. And the problem there is you really can't bail out a pension system if they all start falling like dominoes, and they will be dominoes, because just behind Illinois' pension system waiting to go bankrupt are the pension systems of Connecticut, New Jersey, California, actually. And so there's a whole bunch of them. And if you were really to try to inflate your way out of that, that's true helicopter money. And I don't think we're going to see that, because even there you create a self-canceling rescue job. They're trying to send everybody, the federal government. When I say the federal government, you always need to substitute the word taxpayer. There is no federal government. There's only this big entity that exists and has power because they collect taxes from us and they get to spend them. So any time where, if you hear AOC, what's her face, that New York Congress lady, or somebody talking about the government's got to do this or the government's got to do that, you need to substitute the word taxpayer. And if you're in that broad middle class that would be the ones to pay those taxes, you need to ask yourself, can I really afford this?
Well, if you had higher interest rates, wouldn't those pension funds actually pay for themselves at some point? If you were, say, at 7 or 8%?
It's a no-win game here. I mean, if we've been in a game for so long where the government has gotten to borrow relatively cheaply, interest rates have been artificially suppressed, but that had the effect on savers of lowering their returns, which meant that they had to dip more deeply into their nest eggs. The greatest generation, and now the baby boomers, will find that they're going to deplete their nest eggs more quickly because they're not getting much of a return on their money, unless, of course, they put it in some very risky vehicle. So that is the calculus of deflation. We don't really escape any of these debts. We'll pay for them in one way or another.
On the upside of deflation, lower prices, would it make it more affordable for those retired people?
No, there's not an upside to deflation. We're essentially wringing out a debt excesses that in the derivatives market alone exceed $1 quadrillion of notional value. So when you talk about we have lower prices, I think really we're going to be bartering batteries for loaves of bread.
So when this crisis hits, would they just print more money, and then, of course, that would devalue it, wouldn't it?
Well, you need to, whenever you say they're going to print, you got to sort of figure out who they is. And if you go back to the Weimar hyperinflation, this is what I always do when someone's arguing with me that, oh, well, the government will just print money. You need to understand the mechanism of the Weimar hyperinflation to know why we can't do it here. That hyperinflation took place essentially between late 1921 and 1923, and the periods along that curve that are steepest, where hyperinflation really took off, paradoxically, were during periods when the printing presses, the Reichsmark printing presses, were literally broken. And by prearrangement, the larger employers in Germany were authorized to print their own script. And this was a rescue measure in case the boxcar of money didn't get there for payday on Friday. The employers could print their own money. So it's during those periods where the Weimar hyperinflation was particularly steep. But if you examine the question, how did that money get into the system? You know, there are 10 million web pages that say, oh, the government just printed money and they had hyperinflation. But the money had to be in the system, and a lot of it happened again through this payday mechanism and an arrangement between the largest German employers and the German government. So the problem here is that the deflationary bust, the collapse of pension systems that would initially trigger some banking event, is going to be so deflationary that you would not have the ability to inflate out of it. The German hyperinflation took place very methodically. It was really the Germans' answer to the question, how can we keep people fully employed? The thing that the German government feared worst was a lot of people out of work. So the paradox of the post-war experience was that Britain and the Allies were struggling, their economies were struggling, and Germany was operating at almost full employment, simply because that was where the emphasis of their monetary policy went. So again, it was sort of a political and it was a policy decision to ramp up money creation, but if we were to do that in response to a crisis, it would already be too late. The day that the banks don't open, or maybe one or two small banks that we've never heard of don't open, the whole system's going to unravel, because even the anxieties that those bank closures will create will shut down the clearing network that makes credit card charges possible, because that's the whole plastic money market is based on egregiously misplaced faith that it's such a daisy chain of clearing arrangements between various lenders, various financial agents. So deflation will hit catastrophically, really, and the inflationary response will be beyond logistical possibility.
We'll have more with Rick Ackerman right after this.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, your concerns about the pension system, of course, in the U.S. and Canada, it's funded differently, and apparently they tell us it has a healthy balance. It's invested, though, in the stock market, which, as you know, can fall at any time. What can an average person do to protect themselves from what could be a systemic collapse of their retirement system?
I would stay out of debt to the extent possible. Certainly owe nothing on your dwelling. When the crisis hits, all mortgage contracts will be rewritten to more closely resemble leases. And in a way, we've reached that point already. Nobody really owns a house, and people that buy into a 1,200 square foot rancher in Southern California for $800,000, they never plan on really owning that home. So I guess we've all become renters in that sense. So you definitely want to have your bills paid and to be living, have the ability to live somewhat frugally. You definitely don't want mortgage payments in that mix. So, and as far as investing for that future, you need to just focus on things that everybody shuns right now. Whatever is low in yield that everybody hates, you need to be, that's where you need to put your money. And of course, the main instrument there would be long-term U.S. bonds. Not that I'm so sanguine about the future of the U.S. As a fiduciary entity, but I just think that they'll continue to service the bonds. And again, I don't expect a hyperinflationary endgame. It could happen. All I'm saying is that the deflation part of it has to happen first. And if we go into an economy where barter rules, we may come around to the point where there's political expediency in trying a money printing scheme.
Right now, do you think governments have any focus on this?
I think I don't think they have a focus on anything. I mean, all you have to do is pick up a newspaper and say, well, what problems is our government focused on solving? And I don't know how things are in Canada really, but you don't get a sense that the U.S. government can handle much of a problem. And, not real problems. I mean, we're dealing with, let's say, social problems, political problems, a breakdown in polity in the U.S., and we're just really trying to sort out new relationships. And the big fear is that some of these nut jobs who are winning congressional seats in some political outlier districts are somehow going to wind up as president. You know, these days anybody can run for president. It helps if you have, if you're good looking, like Hollywood good looking, but you know, from day to day we're getting new entrants into the field.
Is it scary when you don't know what kind of government prospects you might have when the presidential elections happen in a few years?
Well, I'm not quite sure it's scary quite yet, because the idea of someone like, let's take what would pass for a moderate among Democrats these days, Kamala Harris. I don't see her as electable. It's possible, but I just have a feeling that when voters take a closer look at what she's offering, which is not significantly different from what Cortez is offering, who fortunately is not old enough to run for president. Otherwise, who knows? Maybe she could win. But I just have a feeling that the Democrats have shifted so far to the left that they're not quite the threat that they imagine themselves to be.
Is anybody going to really focus on economics and what helps the average person, or has that become passé?
No, I think it's very much in vogue. Trump has succeeded with it, even though he would, to let's say an extent that no president before him has. I don't think he gets an A grade himself, because the cost has been a tariff regimen that's been very, very costly. So yes, we do have the steel industry reviving, and but correspondingly we've got farmers, grain sellers kind of on their butts. So we paid a huge cost, and I've never really doubted the classic text on that, going back to Adam Smith and David Ricardo, that in the end we all benefit if we are letting countries that deliver deliverables more cheaply than we can. It's fine. Let them provide for us, and we don't care whether the government subsidizes those products to make that possible or not. The fact is we're getting a bargain. The only problem with that, if you try to argue it through the classical economic theory, is that it only works when all that capital that's freed up, we're buying, we could be buying Russian cars simply, or well, let's not say Russian, but let's say cars from Brazil or Asia, and we're buying them more cheaply than we could produce them, but even more cheaply than they could produce them themselves. So that's good, but it's only good if all the savings that we achieve by being able to buy cheap go into capital investment that makes us more productive. And of course, what we're getting instead of that capital investment is companies like Apple and others putting literally hundreds of billions of dollars into their own stocks. They're buying back their own shares. And it's only the House newsletter, the Wall Street Journal, that would somehow see a virtue in that. But the fact is that they've actually argued that it's good, that corporate share buybacks are a good thing. In the same way they argue that when Grasso left the New York Stock Exchange, that with some sort of golden parachute, I don't remember whether it was $220 million, the Wall Street Journal is the only paper out there with the chutzpah to argue that you need to pay salaries like that to get good help. So in the same way, the idiotic way, they're saying that the share buybacks are good. They create virtually no economic growth, only what you would infer from, well, the shareholders, they get the money in form of higher share values, they cash out and they buy stuff. But that's all consumption. It's not like even that money that comes into the economy by way of share buybacks goes directly into capital investment. If we'd been kind of doing the right thing since the 50s, we would have automobile plants that could produce cars for nothing. We could be underselling the Asian manufacturers, and we would have a natural advantage because we don't have to ship parts and things across the ocean. But we haven't, and it's the fact that we've underinvested and overconsumed over all these years that makes that doctrine of comparative advantage. Just buy cheap stuff from some country if they're willing to sell it, and you'll benefit in the end. That's why we haven't realized the benefits. Why the middle class is in hock up to its ears just to get by, to pay college tuitions and to see themselves through retirement.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Rick Ackerman. Rick, after a record bounce back from the doldrums of December, what's going to happen in the stock market now?
I keep looking at it as a bear rally, and I'm thinking even if we get new all-time highs in the Indus, and it looks almost for certain we'll get them in the NASDAQ, but also in the S&P 500, I still wouldn't be a believer. And it's so amazing the way the news gets rolled out at you so that there's always room for doubt. You know, I'm thinking this market's a fraud. We've got the U.S. car industry on its butt. We've got, housing, I guess, is getting cranked up a little bit because of lower mortgage rates. But Europe and China are struggling. But China, just that story got kind of half taken out of play the other day with the story about the uptick in U.S. and Chinese manufacturing. So I still think this rally from the December 26 low is a hoax. And I'm really wary that the stock market is on to fabulous new highs. But if we are getting into a period where the central banks are going to go into another round of easing, I guess you could say that all bets are off. Anything's possible. And as much as I'd like to believe that people can't be fooled in that way, that mere easing by the Fed is reason enough to drive stocks to even more ridiculous levels, it could happen. Again,
is there a message there or something you can do, or certain stocks that might be more protected than others?
Well, unlike the idea of taking some of your money and putting it in low-yielding, horribly producing stuff like bonds, I don't think there is an answer. When this market falls apart, it's going to take everything with it, including, I think, the gold stocks that you might ordinarily use as defensive stocks. And what used to be your defensive portfolio is, depending on which day you're reading the story in the Wall Street Journal, it's either working or not. You know, Procter & Gamble and all those big companies are either reaping premium benefits from their brands, or the whole idea of branding has been sinking to in-house branding by, so I'm not quite sure what's defensive anymore, except maybe, you find a good utility stock in an area that's growing, and by that I don't mean California. I mean where Californians are migrating to. So you might want to get a dividend-paying utility company in Nevada, or in Texas, someplace like that. That might not be a bad way to go.
Rick, thank you so much for chatting with us.
Well, always a pleasure, Jim. I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. If you have any questions for Rick or any of our other guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.